Hey everyone, in this video, I'm going to update my buy recommendation for Shopify stock after the company reported quarterly financial results. Of course, coming into this quarter, I did not have Shopify stock rated as a buy. So you're going to want to tune in to see if this stock price decrease has now made Shopify an attractive investment and if I am indeed upgrading Shopify stock to a buy. So what I'll do is I'll review the latest financial results from the earnings release, and then I'll update my buy recommendation for Shopify stock. So let's jump into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. For its latest quarter, Shopify delivered gross merchandise volume increasing 23% to $75.1 billion. Revenue increased 24% to $2.1 billion compared to the prior year. Now, these over 20% revenue growth rates is impressive for Shopify because the e-commerce market overall grew by much less than that. So Shopify was continuing to gain market share, something Shopify has done for several years now. It's making great inroads in the e-commerce market as it offers its merchant solutions that are attractive to people trying to start a website, start their sales online. So that revenue growth led to gross profit increasing by 33% to $1.1 billion. The gross profit margin increased to 49.5% compared to 46%. Now, those profit margin improvements were mostly due to its divestiture of its logistics business. Remember, they sold off their logistics business and divested away from it. That was after they spent billions of dollars investing in expanding logistics and fulfillment. A few years ago, this was back when I was still writing articles mostly and I wasn't making videos. I was writing articles at the Motley Fool and I was covering Shopify stock. I downgraded Shopify stock. I had it rated as a buy, but once they started investing billions of dollars in that logistics business, I downgraded Shopify stock because I felt that was going to hurt their profit margins and cash flow significantly, and I wasn't happy that they were getting into that business. I was happy with Shopify before because they were mostly an asset-light business, but going into fulfillment and logistics, that makes it a lot more capital intensive, and that wasn't something I wanted to be a part of. So now they've divested away from that, and they still have ownership equity of that business they sold. So they sold it to another enterprise, but instead of getting all cash, they got a mix of cash and some equity ownership in that business. So they haven't completely divested away from logistics. They still are exposed to that segment. So let's move on here. Free cash flow was $446 million in its latest quarter compared to $90 million in the prior year, a significant improvement. And you can see the power of not having that logistics business weighing down the company and its free cash flow. The free cash flow margin for the fourth quarter was 21% compared to just 5% for the fourth quarter of 2022. And I want to make a point of this free cash flow margin right now because this is the reason why I think the stock price decreased is something to do with the free cash flow margin, and we're going to see a little bit more on that a little bit later. So keep this 21% number in mind. So for the full year, gross merchandise volume increased to 20% and revenue increased 26% to $7.1 billion. Solid increases again for the full year. Shopify has implemented several rounds of price increases on the fees it charges merchants. That's why it was able to increase total revenue for the most part greater than the increase in gross merchandise volume. For the full year, free cash flow, $905 million compared to negative free cash flow in the year prior. The free cash flow margin was 13% compared to free cash flow negative 3% for 2022. So you could see that big change from divesting away from the logistics business, free cash flow margin turning positive after being negative. Now, for the outlook in 2024, management is telling us like it's going to be different. Like, no, year over year, the comparability is going to be different because of the sale of our logistics business. we're going to experience a revenue growth headwind of about 5 to 6%, right? Because when you sell off a piece of your business, those revenues are not accounted in your business anymore. So that's 5 to 6% less revenue growth for Shopify from that factor. And then the gross profit margin is going to go higher because they don't have that business anymore, because that business was so negative to its profitability. Their profitability is now going to be higher just by shedding that business, about 4.5 to 5% better gross profit margin. So they expect revenue to continue growing in the 20% range, adjusting for, of course, that 5 to 6% impact. But here is the thing that I think sent the stock price down, is the forecast for free cash flow as a percentage of revenue in the high single digits, with sequential improvement every quarter throughout the year. So for the first quarter, they expect free cash flow in the high single digits. That's usually like 7, 8, 9% free cash flow margin. But when in the most recent year, they were at 13%. And then for the most recent quarter, they were at 21%. So that would be a sequential decrease in their free cash flow margin for the first quarter. But to management's credit, they do say that they expect that to improve every quarter throughout the year. So things are going to get better second, third, and fourth quarter. So that's why I think the stock price reacted the way it did initially following the guidance. Now, Shopify's stock price did fall all the way down close to $76 per share from $89, $90 per share in the aftermath of this earnings release. But then its stock price has recovered now up to $81.60. Looking at valuation, Shopify is trading at a forward price to earnings of 59.81. Looking at what Wall Street expects from Shopify over the next 2 fiscal years, you can see that for fiscal year 2024, Shopify is expected to grow revenue at 18% with 44.7% earnings per share growth, and then accelerate in 2025 with 20% revenue growth and 30.6% earnings per share growth. So solid growth prospects over the next 2 years for Shopify. However, all that being said, I don't feel the valuation is attractive just yet. At a forward price to earnings of 59.8, given its prospects over the next couple of years, I feel Shopify stock is still a little bit too expensive. I would place it right on the borderline between a hold and a buy, closer on the hold side. I would much rather have Shopify stock at a forward price to earnings valuation in the 40s. Even high 40s would be okay. 45, 46 forward price to earnings for Shopify. At 59.8, I feel like it's slightly too expensive, and I would feel like it's on the borderline between a hold and a buy, closer to the hold side. So if you see a stock price drawdown here of between I would say 8 to 16%, or if the forecast for the next couple of years improve for Shopify because its macroeconomic factors improve, or some other macroeconomic forces or company-specific forces improve its prospects, then that could make the stock price a buy as well, because now you're getting a better expected earnings per share over the next 2 years. And then, of course, I'd be willing to pay a higher price if I'm expecting better earnings per share over the next few years. Nevertheless, I will update you when there is a big change and when I upgrade Shopify stock to a buy. For now, I'm keeping it on the borderline, closer to a hold. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.